I think it is important. So there are two things. One, Fed pause. For that, she's not that important. There are enough doves who can kind of overrule her, and they have in the past. But from a balance sheet standpoint, if a hawk says that they are willing to engage in a balance sheet discussion, that's new information. I think that's a very material piece of information.
Got it. Jason, so that we have on the one hand. We also have the issue about stocks being overbought. But I saw in the bespoke note they themselves said we don't need to necessarily see a pullback. In fact, a lot of the times if stocks just go sideways, that overbought condition can relieve itself, right?
Oh, absolutely. So
Sorry, Jason, go ahead.
So I think also just in terms of the overbought, when we look at different investor positioning data, both institutional and retail, it's hard to see that the market's overbought. I think a lot of investors actually de-risked in December, and they haven't actually added enough risk back given the rally we've seen. And now they're in a bit of a kind of conundrum that do they kind of keep adding risk and chase the rally? In which case, are they buying at the wrong time, or are they, do they kind of fear missing out to the rally going from forward? So from just a sort of technical market flows perspective, it doesn't feel like the market's overbought. It feels like there's people still actually underweight risk, and that actually is, on a net is a positive for the markets going forward.
Krishna, let's say I'm part of a couple nearing retirement. I'm between 55 and 65. I want to invest for a time horizon of 25 to 30 more years so that I don't outlive my money. As you look forward over the next 2 to 3 to 5 years, how would you draw the pie chart of U.S. equities, foreign equities, bonds, cash, et cetera?
Asking for a friend?
So the starting point for us on that count is the fact that we believe the current expansion will last a long time. The catchphrase we are using is 5 more years. If that is the case, I think the allocation into equities in the current environment should be significant for somebody like the person you just described, which resembles me in a lot of ways. I think the allocation into equities have to be almost 70%, let's say. And off of that, I think valuations overseas are meaningfully higher. So probably 30–40% of that 70% allocation, if I were them, I would probably put in international equities.